As we move into 2022, we've realized that economic growth is going to slow from those blockbuster numbers that we saw in 2021. The economy is going to continue to be challenged by the inflation pressures, the supply chain that still will take time to repair, and also labor market shortages. But we don't think that a recession is in sight. In fact, if you look at this chart, we're going to post the best 3 years of annual GDP that we've seen since the late 1990s. Now, instead of the consumer, who was such a strong contribution in 2021, we think there's other areas of the economy that will continue to support economic growth this year. First of all, manufacturing. There's a long way to go before we clear up the backlogs of orders that we saw from 2021 and also replenish those very slim inventories. When you look at the labor market, we do think that we've seen some improvement in the labor market. We've got a ways to go before we get labor force participation back to where we were before the pandemic, but we are making some room there. It is one of the best times in history, as you can see in this chart, for employees to get wages that they want and also find the job they want. You can see that job postings are sitting at a record high. Lastly, just because the Federal Reserve is going to raise interest rates, that doesn't mean that we're going into a significant tight monetary policy period. In fact, if you look at this chart, even with the expectation of rate hikes, we're still looking at real rates, which takes into account inflation, deeply negative throughout 2022 and into 2023.